What's up, guys? It's Rob here, and today we're going to be talking about CLOV stock, ticker symbol CLOV, Clover Health, because this company is up pretty decently today. It's up around 20%, and it is a company that I like. It's a company that I used to own and I'm looking at getting back into, and I figured this would be a good opportunity, now that it's up so much, to talk about why I think this company is probably going to be doing fairly decently in the future, all right? We've already heard some good news from them. We've covered some of it on the channel, mostly surrounding their earnings, all right? But there are a couple of other things that CLOV has going for it. First off, I want to point out they have a $1.29 billion market cap, and that despite the fact that they're up today, they are still down massively. If you look at the past year or so, they have been hurt massively over the past couple of months, all right? They are down dramatically, even from where they were just earlier this January when they opened the year. They're actually currently down about 29 to 30%. So they have been hurt over the course of the year. There's certainly a lot of upside that they could experience if things go right for them. And I do want to point out that Cathie Wood says she still expects to see spectacular returns over the next 5 years in a lot of growth stocks. Now, she's not specifically talking about CLOV. I don't believe she holds any CLOV. But I think this is an overall trend that we're likely to see in the stock market, as a ton of small market cap growth stocks have been decimated over the past couple of months and to a year, right? More than 1/3 of NASDAQ stocks have slumped 50% or more, despite the fact that that's not represented in the overall indexes. And this article was actually published January 14th, so over a month ago, when a lot of these stocks were much higher than where they are now. So there is some massive potential upside, I think, for some of these smaller market cap stocks. We're going to talk about CLOV specifically and why we might see some big growth in CLOV. Obviously, they had a great earnings call and some great projections. So they just did their earnings call recently, and their revenue was $432 million, up 160% year over year. Their customer base increased 223% year over year. And in 2022, they're expecting $3 billion of revenue, projected by a 90% increase in growth, okay? So we're going to see if that ends up happening. Hopefully it will. But regardless, they have a relatively cheap price to sales ratio of 0.68. Now, I want to compare this price to sales ratio of that of Apple. And I understand it's not the perfect comparison, right? Apple's an absolutely massive company with a ton of assets under their control. And so there might be more reason to buy into them. They're a bit safer than CLOV and have been around for a lot longer. They're very established. But I do want to point out that Apple's price to sales ratio is 7.23, absolutely dwarfing CLOV's price to sales ratio of 0.68. So Apple is trading at a very expensive premium compared to what CLOV is doing, at least from a revenue perspective. And if you actually look at Apple's revenue, you can see their most recent earnings call, their revenue jumped about 11% in quarter one of 2021. Now, if you extrapolate that out for the year and just assume they're going to do what they did in quarter one every quarter, then you would expect about a 44% increase in growth, maybe a little bit more. Now, CLOV is expecting a 90% year-over-year growth in their customers and thus likely in revenue as well. And if we do see that, then that would make their price sales ratio even that much more attractive than what we're seeing with Apple. Right now, Apple is trading, once again, at a 7.23 price sales ratio. CLOV is trading at a 0.68 sales ratio. And it goes to show just how decimated a lot of these smaller market cap stocks have gotten over the past couple of months. I think that they're trading at incredibly low valuations, at least compared to the mega cap stocks that we're looking at, like Microsoft and Apple and Nvidia and Intel, and all of those that are trading at huge premiums compared to what a lot of the stocks in the market are trading at. And unfortunately, if you look at the overall indexes like the S&P, a lot of that pain over the past couple of years is hidden in the growth that we've seen for the large market cap stocks like Apple, which have just been going up and up and up, and have experienced a little bit of pain over the past month or two, but nothing compared to what we've seen in stocks like CLOV, which have been absolutely decimated from their highs. Now, CLOV does provide some promise over the long term. Obviously, there are some risks with it, but we are seeing some growth today, and I think that a lot of these stocks, CLOV included, are probably bunched in with the stocks that Cathie Wood is talking about. Once again, she didn't specifically mention CLOV, but I think that we're looking at spectacular returns for a lot of these growth stocks, CLOV included, over the next couple of years. You know, CLOV presents an interesting opportunity because they are projecting such monumental growth and are trading at such a low price to sales ratio. And even if they were just to get where they were when the year started in January, that would be about a 50% increase in price. And if they were to get back to where they were not too long ago, closer to November, just their average price in November, it would be about a 200% increase in CLOV price. And that's one of the reasons why I'm looking at getting into CLOV a little bit more seriously. You know, I was in CLOV way back when. I sold out of it before the big crash, and now I'm looking at getting back into CLOV because they are producing really good numbers, right? Massive growth year over year. And this is what I'm talking about in the live streams, guys. you see these companies improving on a fundamental level and getting decimated stock price wise. And that is the magic recipe, right? That's the magic mixture of ingredients that I like to see when stocks are really good buys, right? When their price is getting decimated, but when they're improving fundamentally, eventually I think that their price, stock price wise, will return to the mean and go back to what it probably should be based off of these fundamental results that we're getting. Right now, I just think that we're in, unfortunately, a depression for a lot of these smaller cap growth stocks. I think that shorts have had a heyday over the past couple of months and have really been profiting, where a lot of people who are holding these stocks have been suffering, but that likely won't last forever. I think that we're probably going to get to a point where these stocks are just too darn cheap, and big institutions are probably going to have to start recognizing that there's more upside than there is downside, and they're probably going to start buying. So hopefully we'll see that sometime soon. Obviously, none of this is financial advice. I'm not recommending anyone make any certain moves with their money. If you appreciate the video, feel free to subscribe to the channel, like the video, all that. And other than that, guys, have a great day. I'll see you in the next one. Bye.